Last week, markets were spooked by US inflation figures showing the highest level in 31 years. This week, it's the UK's turn as inflation data comes out on Wednesday. There is also European CPI data this week, but so far Europe's been lagging behind and the ECB don't seem to be as close to taking action. So it's probably not going to be as impactful for now. Whereas the Bank of England are clearly teetering on the edge of raising rates. So let's see what we can expect from the reading this week. It's expected that CPI for October will come in at an annual rate of 3.9%, which would be higher than the 3.1% from the month before, but clearly not as high as what we're seeing in the US. But still, the highest level in the UK in a decade and a quick rise. And if we get a surprise to the upside like we did with the US CPI last week, it's very likely we'll see a huge reaction in the markets as well. So for that, I'd be focusing on the pound and the FTSE 100. Now, just yesterday, Andrew Bailey, the Governor of the Bank of England, and 3 other members of the Monetary Policy Committee, the MPC, were giving evidence to the House of Commons Treasury Committee. And it seems, once again, many of the comments from Bailey suggest that they're ready to pull the trigger on rate rises, that they're coming, they're imminent. In their previous meeting, you may remember we covered it in a previous video, the market expected them to raise rates then, but then they didn't. So Bailey then said that they were waiting for jobs numbers to show how the end of the furlough scheme had affected the unemployment rate. And well, yesterday he said that so far, the end of the furlough scheme seems to have not added much unemployment. So that bodes well for raising rates. However, he did say that they'd be looking at 2 other labour market releases that are due before their next meeting. The first was the employment payroll numbers that were released this morning, and the next one comes in December. So the numbers released this morning were pretty much in line with expectations. The unemployment rate had reduced to 4.3%. Average weekly earnings were up 5.8%, claimant count rate was at 5.1%, and the employment change was 247,000. So the data released shows that the labour market is continuing to improve, and it means that the conditions are now looking pretty much right for the Bank of England to start raising rates. So now let's see what the inflation data brings tomorrow. In terms of markets, I'm looking at GBP USD cable. We stalled at a weekly reversal zone just last week and closed as a type 1 with a bit of tolerance. I'm looking to trade a higher low intraday and catch a move up. Although whenever I say these things, the charts always change between when I actually film this and when the video comes out. So for points of reference, I'm saying this at 9 o'clock in the morning UK time, and I'm expecting to be able to trade a higher low, or at least that's what I'm waiting for. But let me know which markets you're following in the comments section, and also let me know, what do you think the Bank of England are going to do? Do you see a rate rise coming in December? In my opinion, it seems to be on the cards now, and I'd be surprised if they didn't, but with these guys, who knows? They already surprised us last month. So hit the like button to support the channel if you found this one interesting or useful. I'd really appreciate that, and I'll see you in the next video. Take care.